Oh, yeah. Welcome to the Trading Pit, your virtual gathering for sophisticated traders. It's January 11th, and what a week it has been. We got the SEC getting pawned with some fraud and fake ETF news. Then we got ETH soaring back after being declared dead. Now the Bitcoin ETF is live. That's right. It's been absolutely crazy. I'm your host, Marconi Wight, and today I'm joined by two of my favorite analysts, JJ and Bejamin, who are going to tell me where are we headed now that the long-awaited ETF is live. I cannot wait to get into this. JJ, I want to start with the same question we start every single episode with, is what is the mood of this market? Is it bull, is it bear, or is it boring?
Well, it certainly looks bullish right now. Heading into the ETF in a few minutes, I guess we'll see what the day has in store. There's not really much precedent for this, so excited to see what comes in the next 15, 20 minutes or so as the market opens here.
Oh, hold on. I want to put out the bull. I want to give everyone. All right, everyone, you heard that. That was the first time we've been able to use that sound effect.
Yep. So here we are. We're looking at the Coinbase order book. Right now, we still see there's a lot of ask liquidity above. So this is kind of the same structure we saw 2 days ago. Price is kind of moving right up into these asks. And what we saw last time is price obviously just fall back down after that ETF news came out. Huge wipeout. If we go to the liquidation charts here, we kind of see the carnage that's been taking place over the past few weeks. We saw the longs liquidated obviously last week, then shorts liquidated on the way back up, and then both sides just wiped out entirely. So kind of as a result of this, nobody really has much of an edge positionally, but price is still grinding higher, which I think is a bullish signal. But this is anybody who's been trying to trade this thing with leverage over the past couple of weeks has just been absolutely getting annihilated. So it's been interesting to watch. And from here, go ahead.
Yeah, I was going to say, I think last episode, maybe even the one before, I think we were cautioning about anybody using leverage and trying to get into a new position. If for those who haven't listened, you can check back some of those early episodes. I mean, I think you guys were even avoiding any kind of new trades.
This is not the environment to be trading with leverage for sure. Who's ever making these markets now is doing their best to take out both sides as frequently and as often as possible. I think we'll probably see some similar back and forth today, just kind of this whipsaw action. I don't expect it to stop. Like I said, we're looking here at the order book. I highly doubt price is just going to run straight through these bids here or the asks. So we'll see. I mean, it looks like it's probably going to reverse a bit. But one thing we did see here, so this is Coinbase's spot order book, and this is something that I found really notable yesterday. I actually tweeted it out. So price kept coming up into these ask walls and then sinking. And every time it was coming back down, we weren't seeing bids, but there was market buying. So we see this in this green candle here. So this was actually the largest buying power unleashed on Coinbase since October 22nd, which was obviously when we had that huge 20% move up from like, what was it? Around under 30K to upwards of 35K there in the matter of a day. So yesterday there was tons of profit taking, right? The news finally came. And like we said, there was probably going to be some sell the news effect, but all of that was absorbed by these spot buyers. So this is what prevented the market from really sliding back down to say below 42K, 40K, is that there's just been this persistent TWAP spot buying bid on Coinbase. We don't know who or why. I guess as likely some way connected to the ETF, right? Like whether that's them buying their allocations now, who knows? But price has just been resilient due to this massive spot buying. So that's something to keep an eye on, see if it continues. It looks like these sell walls are actually being placed here to suppress the price in order to keep getting these bids filled. So this is like kind of very sophisticated order book management here that they're doing to get these bids filled at a lower price. Obviously expecting higher prices in the future, I would imagine, if they're buying all of this supply here and now. This was getting filled at like, anywhere in that 44 to 46K region. They've just been buying pretty nonstop. So it's been pretty fascinating to watch there.
Yeah, it is fascinating. We've got Ben Lilly in the chat. He just said this is a historic open today. He's absolutely right about that. And Eric Weinstein said, don't underestimate taker orders. I think everyone's kind of looking at this historic event and asking what kind of shenanigans are going to continue to happen.
Yeah, it's nuts. Like I was not expecting price to just kind of catch itself here, but that's the taker orders. Is they were just taking it anytime it was sliding down deep enough. They were just taking that liquidity, buying it up. And like I said, like the amount of buying pressure that we saw on Coinbase yesterday was equal to the amount of buying pressure that sent us up 20%. The only reason why it didn't this time is because these asks stayed in place and have been suppressing price a bit. So really, really interesting here. And like there's so much profit taking too, like open interest. Here's our true open interest, and Bejamin can explain this a bit more the way it's calculated, but we see it's all the way down to lows we haven't seen since May of 2022. So this is really interesting because price is going up, and it's going up purely because of spot buying. If we look at the options, we look at implied volatility, that was sinking as options players took a lot of profit this week. So there isn't like this froth that you would expect. Like if you would have told me we were going to be over 47,000 and there would be not really many signs of froth available in the market, I'd have a hard time believing it. But the market took profit, and usually you would expect price to go lower at that point, kind of fall down to the 40K region at least. But there's just been that persistent spot bid. So I don't know if that's something we really want to fade.
This is why you have the supercycle theory and infinite bit theory getting traction again since last night, to be honest. Because there was a statistic where someone was explaining that it's been nearly 350 days since BTC had more than a 30% correction, right? So in a bull market, typically BTC has a 30% correction every 3 months, very easily. So if it is catching bid, and if it is not even able to drop 30% after making a local high, so, and if the range creation becomes like 10% range, like what we've been seeing since 40K, what we've been seeing since 30K as well, it's 10 to 15% is the range that it creates, consolidates, chops everyone, trends up. And if open interest behaves the way it does, like, why do we want to compete it?
Yeah, like one of the reasons why I was thinking that we were going to fall back to 40K or below after the ETF announcement is that the whole move up from say 28K to above 40K was mostly driven by short squeezes, right? We had that massive gamma squeeze in October, and then the additional short squeeze that brought us to 44K. And then we've just been seeing kind of shorts and longs get liquidated back and forth over the past month. But what's interesting here is that there's not really that many shorts to squeeze above anymore, but price is still moving. So that's kind of a very interesting signal there. And that shows legitimate demand. I mean, not surprising. We have the ETF now, but this is kind of the perfect setup you would want to see if you were long-term bullish for sure.
So the froth from the cappuccino is gone. Now we're seeing, we saw the OI wiped out, reset, which is a good sign. And we're seeing the spot continue to be added to the to buyers. So this is a good sign. I want to ask a little bit about options. Come back, I think Bejamin to some of these theories. But before we do, I want to thank all those who just joined us. It looks like we got a few more that joined the live session. Welcome. If you haven't already, please like and subscribe to the show, because we're trying to get this out to as many people as possible. If you find this to be useful for your thinking, for your trading, and just for your daily sanity, I suggest hitting that like and subscribe button. And I'll say one other thing. 2024 is going to get absolutely crazy. Exchanging Good has some really big ideas for the year. And with that, we're going to be adding some sponsorships to the show over time. So if you know anybody who's interested in trying to reach to the sophisticated traders that we're going to be tuning into the show, reach out to me, Marconi Wight, at proton.me. I'll give my link in the description below, and let us know if you're interested in sponsoring the show. We'd love to have you on here and bring great products to smart, sophisticated people. But let's get back to the show. Okay, I want to ask you, JJ. We always talk about, we go through spot, we go through perps, and I want to ask about the options, because oftentimes that's going to leave a trail and kind of tell us where we think things might be going, especially at confusing times. So is there anything in the calls and the puts that's telling us where we think the market might be headed?
So like I said, we saw the implied volatility levels really fall off a cliff the past couple of days here, as there was a lot of profit taking, especially on those contracts expiring at the end of the month. People were pretty bullish to the upside, and then they took it once we got it, when we got that first pop that turned out to be the fake announcement. So it's fallen off. there hasn't been like a huge rush to the upside yet. There has been upside buying over the past couple days. I don't have that screen in front of me. I probably should grab that, but there's nothing that's really hinting at a major move coming there. Like I said, it's not, this isn't going to be an options driven move. In my opinion, this is just a purely spot driven move right now. And I think everybody's kind of asking the same question. Like, is it going to be continued? Like, do we get this break over 50K? It's kind of max uncertainty. There's some.
Yeah, it is max uncertainty. I mean, Benjamin, jump in here. I want to bring you back to this idea, this theory, this super cycle, which I think Dan Hurd had talked about last cycle. And yeah, I put out a tweet earlier this week talking about the fact that every single one of these gurus was wrong, in terms of their price targets. They talked about 100,000, 150,000, 200,000. Some went even higher than that. And, we didn't even clear 70K during the last cycle. Now we're coming back. We're talking about these narratives about the super cycle, and it's just going to be infinite buying. I mean, how do you look at that as a trader, and what data is going to tell you whether or not that's actually starting to play out or not?
So the thing is, if we look at 2020-21 cycle, we had NFTs and metaverse and the land buying in metaverse. All of these things catch up pretty quick as soon as BTC made its first 50K to 60K top, right?
Mm-hmm.
And then you started seeing all of this alternative ideas FOMO in and pick up a lot of cash. And it was easier to go there and make money rather than try and play BTC, where people have that unique bias problem. So what I believe right now probably happens is that there is a different narrative. So the reason why prices need to be kept up is because these entities who are coming in on traditional finance, they want to sell it. So they don't care about what price BTC is trading at. They don't care if it is 40K. They don't care if it is 400K. The narrative to sell is if it is continuing to pump or continuing to remain green on a yearly candle basis. Why? Because why would you buy an asset which is dumping 30%, 40%? You can't sell. It's a fee game, right?
Mm-hmm.
So probably diminishing returns comes into play much more than what it was earlier. Probably you don't stand to make 10x in Bitcoin in the cycle, but probably the cycle extends for years together than it was earlier.
Yeah.
Because if BTC remains stable, let's say in May or August, ETH also gets ETF, and then the same narrative gets copycatted into it. And next year, 2025, Solana gets an ETF. There is no end to it. The precedence is there. So there is no reason why Ripple or Solana wouldn't get an ETF for that matter. If like what the Grayscale guys were keeping on tweeting, if you fill in the right forms and if you're ready to sue the SEC in the court, then you can get anything passed.
Mm.
So that's what it looks like. And Gensler was the tie vote, and he voted yes. So what are you going to do? So with that nature in mind, with nearly 51% of the Bitcoins haven't moved from their wallets in nearly 2 years, and there is constant one Bitcoin or small amount of buying of new wallets that keeps on coming in, with the ordinals narrative coming in, with the BRC20 narrative coming in, the potential L2 narrative on BTC coming in. Maybe we see the boom that ETH had in the last cycle happen on BTC this time. There's no reason it shouldn't.
Yeah, JJ, jump in here.
It's a powerful thing. Like, we have kind of these multi-trillion-dollar asset managers that are essentially shilling our bags now to pension funds, et cetera. Like, that persistent, just averaging in, like that persistent buying power that you see from pension funds and retirement accounts and whatnot, like that's going to be translated to BTC. It's ultimately in their best interest to sell these ETF to people, and it's just probably going to be a constant bid over the course of years. I think it's definitely changing, like the 4-year cycle and whatnot. It's making me kind of evaluate how those things will go into the future, because I think there is going to be like not as wild to the upside, and the downside's also going to be probably capped as well compared to what we're used to seeing. It's probably going to be more like an S&P style run up, where if you look at the S&P over the course of say 5 years, you see there's not like too much wild action here, right? It's just kind of this persistent up and down, up and down. It's not wild swings the way Bitcoin and like the unregulated markets trade in, right? So now we have this institutional presence that keeps things capped on both sides. So we're not like, if volatility explodes too high, they'll step in and sell it in both directions. So that kind of creates a floor. It's just going to be really interesting. We're all just speculating. Like nobody has an idea of what's to come, but it's
JJ. I'm gonna put you a little bit on the hot seat because we've had you on here so much, and I like you, as I said at the beginning of the show. We've talked a couple of times about, and we did an episode for all those listeners. If you haven't checked out the episode, we did trades to do before the ETF, trades to do after the ETF. It's definitely worth a listen, especially now that the ETF is live. We talked about this being a buy the rumor, sell the news event. Given the activity we're seeing right now, what do you think? Do you think that was the right call, or is it too early to call?
I think we saw the news sold. So everybody that was speculating sold it. And then, like I said, there was this unexpected or expected, whichever way you want to frame it, there was spot buying. And that's what we saw yesterday as we were discussing. Like, I would expect the price to go much further from here as people took profit, which they did. But then there was a new entrant, right? Somebody came in here and said, okay, if you're going to sell it to me at this price, I'll just buy it. And that's why price hasn't broken down, is because they were spot buying. So I figured like, okay, they'll launch this ETF, it'll be sell the news, and then they'll buy it back lower. Like I was expecting those bids to come in, say in the 40K or below region, but instead we saw it at say 45K. So they really stepped in to keep price going, which I think is good for, if you're an institution, you want Bitcoin to be price pumping on the day of this release, right? Like you want the positive headlines, creates that snowball effect, gets media attention and whatnot. So I think that's probably what happened. It's just been fascinating. Like I was not expecting this much spot volume to come in at 46 to 45K, but there it was. So
what I'm hearing is it was actually the right call, except for the expectation in these markets is typically I would say a steeper drawdown. Didn't see that. The volume's coming in, and what you guys are both saying, what you're expecting now is that you're going to see some of that muted volatility action happening because the larger players have different incentives. I think Bejamin, you just comment on the fact that it's a fee game. They want to see this grow. They'd be fine with it growing a couple of percentage points every single year and just being able to collect the fees nonstop. And they don't care how high really Bitcoin's going. And then to that point, it's just they need to continue to buy up some of that volume, keep it muted a little bit. Like you were talking about the S&P. I do want to ask one point about that though. Is the S&P the correct way to look at this? Because there's a lot of discussion about, is this an equity? Is it a commodity? Should we be looking more at gold, or should we be looking at uranium, or should we be looking more at oil, which does have a lot of volatility if you look at a price chart over a 10-year period? I mean, I don't have it in front of me, but you remember a point when oil goes to 150. I think last I checked, it was trading at 70. So it has a very broad range. Is BTC or cryptocurrencies going to trade more like equities, or going to trade more like commodities?
I don't think you can compare it with oil. Oil prices are controlled by an entity. To be honest, you can increase its supply at any point you want. The same thing does not apply for gold. Gold, yeah, sure. I mean, until you discover more gold, it's a finite supply, right? So there is a measured amount of gold supply that exists, is the assumption. And it is difficult to source gold. It is difficult to process it. It is difficult to store it. It's expensive. So the next alternative that is at least perceived in our generation or in the next generation, the youngsters at least, it's still BTC. Maybe even not BTC. Maybe it is Dogecoin or Shibu, because that is the next transition that's basically going on. I mean, to pacify Solana fans, it could be WAF, it could be Bonk, K-Bonk, J-Bonk, and all of those as well. I mean, sure, it's not possible. It's not impossible, but it's definitely not oil. And I'm not entirely sure it can be compared with S&P 500 as well, because S&P is an amalgamation of multiple stocks, and to be honest, right now it's just 7 stocks which basically drive any of these stock indices, right? So BTC is BTC. It's on its own, and they're trying to convert it into a potential gold type of vehicle, which basically becomes a liquidity machine. So
it's really unprecedented. Like, kind of, we're all trying to figure out what happens when you have all this demand meeting limited supply, right? And that's obviously, I think it's bullish, but we don't know. Like, this is where we'll have to see what the inflows are today and whatnot. Like, it's very much it's going to be fascinating to watch either way.
Right.
What kind of comes next? And as we're watching here, it looks like price is moving right up into those asks, above 48,000 here. So let's see how this plays out.
Well, that's why we like to join at the market open to see exactly what's starting to play out in the market.
Yeah.
Okay, let's kind of recap where we're at. So we see the spot buying. It's been stronger than perhaps we expected. It's one explanation why the drawdown wasn't as severe as expected. Perps reset and options not really showing any kind of direction right now. If we see continued buying on the spot level, I think that's just going to continue to be bullish for a move up. Does this reset now where you have any price targets? Before we talked about something being reset maybe at the 48K level. Seems like that's off the table for the time being.
I don't think like we're gonna have to see how this sell wall plays out, right? But it's gonna be hard for us to go over 50K, say before the end of the week at least. As long as it's here. Once these bids are finished getting filled, because it looks like these are being placed here to suppress price so they can continue buying, then we'll see where price goes. No idea how might even go lower in the short term. We just have to see how this plays out. But I think it could get up above 52K in the next week or so. I think that's in play now. Just due to this market structure, like we don't see a ton of froth currently. The setup does look pretty good. So
yeah. Okay.
I mean, if you look at the order books, apart from these Coinbase asks and Binance asks, so apart from those reasoning, like what other reasoning do you have that it has to necessarily top out over here? Sure, 48K to 50K zone was a monthly liquidity. So it's possible there is a lot of resistance, but with such a narrative, like, why do you want to fight it? That's the question that keeps popping on my head constantly.
Yeah, look at this.
Why do you have to fight it?
I don't have enough money
Maybe
to trade
we get a
against this.
quick drop. Maybe it just drops. Yeah, maybe it just drops. Maybe we see a very quick dump for some reason. I don't know what reason. Maybe something comes in. Maybe your oil prices go up. Maybe they say, we're going to not cut rates anymore.
It does seem like a whipsaw action ahead. Like, I think basically the pattern we've seen over the past couple of days, price goes up, gets overextended, drops back down. But it seems like those dips are going to be for buying.
We're on buy the dip season, people. And it's a new regime. We've been talking about that.
Not expecting to say that at $48,000, but here we are.
Yeah, I still don't want to say that. Yeah. I still don't want to say that because it's still not right.
Okay, you guys hedge your comments like you hedge your trades. I get that. All right, well let's talk about the I would say the elephant in the room that's always a little bit scary, and that is the Dixie. We bring that up every time. What is that doing right now? We just had the CPI report, and from what I could tell, I don't have the numbers directly in front of me. They came out just slightly hotter than expected. Yep. And so what is Dixie doing? And perhaps what is that going to give us? Is that going to give us a risk off signal or risk on signal anytime soon?
So keep in mind, we do have PPI tomorrow. So we had CPI today, PPI tomorrow, which will give some decisiveness to this. But it's still right on this 50 RSI resistance here on the daily chart. It hasn't really made a move one way or the other. We just see this tight consolidation. So until this breaks down, like that's kind of one reason why I'm still leaning a bit cautious. Like we see those asks, we see Dixie hasn't fully broken down yet. We don't really have a read one way or the other. Like if this gets above 103, I think any pumps from here will be short-lived. I think it will have a harsh effect on liquidity in the markets. But I mean, tomorrow this could drop down and take out the lows. So still keeping an eye on it. We haven't really seen the decisiveness from CPI. So all eyes move to tomorrow with PPI. And we see what happens then. But as long as this is trading in range or breaking lower, it's going to be bullish for BTC. But if it breaks out higher, that's kind of your warning signal that the top may be in near term.
Okay, yeah, and I just to reiterate, the numbers I had here for the CPI, the headline CPI was 3.4% versus an expected 3.2%, and core CPI was 3.9 versus an expected 3.8%. So a little bit hotter.
The rates market hasn't reacted too much.
I was going to ask you about that. Okay.
Yeah. So you see it here. It's actually moving upwards, which is still indicating lower rates. So that CPI, if it was truly bad and it was going to lead to more rate hikes, we would see these drop down most likely. The terminal rate would be rising. when it rises, this drops. But instead, it's just kind of stayed in the same range. It seems like this is waiting on decisiveness from PPI tomorrow as well. So not much of a read there one way or the other, which is bullish. Like if things just stay they are, it's a bullish structure for Bitcoin as long as this doesn't move up to above the 200-day. That's kind of the line in the sand where I'd really be risk off Bitcoin here.
Okay, so again, I'm going to summarize where we're at. You guys, based on the data, we've taken the froth off the cappuccino. Spot buying is still looking good. Dixie isn't really giving us a signal to be more bullish or bearish. And I think Bejamin, as you said, don't fight the trend. It's going to steamroll you at this point. So this can continue higher, and it will continue higher as long as it wants to. I want to pivot a little bit away from BTC now and talk about the wild ETH run that we saw this week. I I remember in the chat, I don't know if it was Ben or if it was you, JJ, but you mentioned something about let's go, or it's time to roll. And next thing we know, we saw ETH just do this massive candle. And I was asking the question, I mean, what's going on here? Is it just that ETH there was some sell pressure that's been relieved? I think it was coming from Grayscale as they were trying to clear up some of their debts, and they were selling off ETH. Is it this new narrative? What's going on with ETH right now?
It's been fascinating. Like, look at this, how oversold it was when we were discussing things on Tuesday. We got that huge bounce up. And you saw the narrative flip. Like, as soon as that ETF announcement came, the fake one on Tuesday, the ETH BTC ratio just shot through the roof. If we look at the ETH Grayscale Trust, this was trading around 17 on Tuesday, and now it's up over 22. So you just see the market, as we've been saying, like the Bitcoin ETF brings weight to the ETH ETF due to the legal precedent that was set. You can't allow futures ETFs and not allow spot ETFs. There's already an ETH futures ETF. There's spot ETFs in the pipeline. So it's going to be inevitable that they're going to have to approve an ETH ETF too. And you really see that now it's kind of taking that liquidity out of altcoins, and we're seeing ETH just run. Even versus the BTC, it's down today, but yesterday it was up some extraordinary percent. So it's interesting. I don't know if it's not going to retest this bottom. Like, this was good volume here, but it's not as much volume as we've seen at past bottoms. It might need to come back down and retest this, especially if Bitcoin hits like escape velocity above 50K. I think that would take the life out of ETH in the short term. Not that ETH's price won't still keep going up, but first BTC, it might take a beating, and you might get a second chance to buy this bottom. But I think if we do retest it, that's probably a buy signal here due to that strong impulse move that we saw off the bottom. So yeah, it's looking great. Full steam ahead for ETH.
Yeah, interestingly, there's been a discussion about ETH being dead. Obviously, you see that online. But then the other part of it has just been waiting for this capitulation event. I'm becoming more and more convinced there's a high percentage that the capitulation is here. We're not going to see the point 0.03 that people have been looking for a variety of reasons. It could be that they've reduced the amount of emissions. We have more that's staked long term, so you don't have people that are going to be floating their Ethereum. But what's the take, guys? I mean, Bejamin, what's your perspective? Do you think that a larger capitulation event is still in the cards for some time in 2024?
I mean, typically pre-halving, we have something like that. I don't know how big of a capitulation we could get or so. So the thing is, I don't try to predict black swans. There's no point in trying to predict black swans. Ideally, in a bull market, we get a 30% correction. Market takes a 30% correction, alts do a 40-50% drop, and then everything runs. So mainly what I focus on is basis, like futures basis. What is the premium to spot and funding rates? How the open interest is looking like, and what is the retail sentiment looking like, and then comes the order books and on-chain transactions. So I mean, in past 10 days, we have printed $3 billion worth of Tether and started moving it to exchanges. So, I mean, it makes sense to curb any huge bearish sentiment.
Right. Okay. So it could happen, but like you said, you're not trying to call it out. I guess, JJ, your perspective, maybe it's the same, just being more a trader and less looking at some of those fundamentals.
I was looking at this ETH divergence chart this morning, and I think we saw a lot of capitulation over the past year. So if we go a little bit further out, we see that there was tons of whales and smaller wallets just accumulating ETH, especially into and before the merge. So all of 2022, there was a whole lot of buying taking place here. And then throughout the past year, we see when you see the blue dots here, this indicates all wallets selling. So there's just kind of been this persistent sell pressure on ETH because it hasn't been moving. So maybe we've reached the point where enough blood has been taken out of the market. Those people have capitulated out of their bags, thinking that ETH was just going to go to straight to 5K and above after the merge. And they've kind of had to sell out of their positions over the past year. And now it's clear to go up. That's kind of the way markets work, is when a trade's overcrowded, it doesn't work out too well, right? And we've seen that. So maybe now, maybe Bitcoin has one more leg up alone from here, say above 52,000 or so. I don't think ETH would outpace it in the near term, but then over the course of the remainder of the year, after the halving, certainly, I think this ratio is going to run pretty nicely. I would say, like, if we get another chance at this bottom, that's probably the spot. That's probably it. Take it. Yeah.
Okay. I just want to point out, I'm looking at the chat. Ben Lilly's in the chat. Spot ETF volume 1 billion as of 5 minutes ago. 2.3 billion as of 3 minutes ago. And we're 19 minutes into the market open. What do you guys make of that?
Fascinating.
I mean,
yeah, interesting.
I mean, this was the point.
Yeah.
So this is the grand launch.
They weren't going to let it flop.
I mean, pre-market, we saw $2 million worth of trading volume is what BlackRock ETF was saying. You want prices to pump on the launch day. It doesn't matter whether it pumps on the announcement day or not. You want it to pump on the launch day. And given the unit bias that people have, BTC ETF is cheaper to buy exposure to, right? Because it's $20, $30.
Yep.
And it is an illiquid market as well. Maybe they pump it up to 40, 50, 60. Easier to do a 2x or 3x on the ETF compared to actual BTC. It's possible. We already saw a huge wick on BlackRock ETF today. So
yeah. It's just
it went all the way to 30. It started trading at 27. It pumped up 10%. But did the BTC market pump 10%? No, it did not. So
yeah, BTC is only up 5%.
It's all about narrative. They're painting the chart so that they can sell more.
Yep.
Yeah, that's what worries me. I don't know how long this will be sustained still. Like, we see this ask liquidity still here. It's just, it's good. Hey, let the number keep going up, but I don't.
Yeah, I mean, I'm never going to complain for a number going up. I complain only if it goes down.
Yeah, that's right. Okay, well, I think we've done a good job of going over where the market is today. Obviously, we've got some great news. Historic day in which we've got these volumes coming in, and as you said, we're not going to fight the momentum and fight these volumes. It's fantastic.
It's just insane. Like, look at this implied volatility. It's falling, and BTC is over 49,000. I would have expected implied volatility to be going through the roof if Bitcoin was above 49,000.
Why is it not going through the roof?
There's not that option impulse. People aren't buying it, so the implied volatility levels are sinking. So people aren't taking optionality here.
Is it possible that as much put premium is already accumulated?
Yeah, I mean that
sends a lot of sidelines, to be honest, on BTC traders. A lot of people are on sidelines. They don't want to trade BTC. They either want to go and trade Lido or Arbitrum or Optimism, because the next narrative is ETH. And the beta to ETH is basically these tokens, or ETC. ETC pumped 60% today. What fundamental changed in Ethereum Classic, right? So nothing has changed. And it's basically, people don't want to trade the main tokens. They want to go and trade the betas, because instead of waiting for a 1% move on ETH, you can go and do a 5% move on Lido, which is basically in price discovery right now. So that's the mentality right now.
Yeah, I think this is a lot of
what worries me is that probably this has seeped a lot into BTC as well. Yeah, I don't know.
I think this is a lot of cash and carry too. So we have those massive inflows of people buying spot. They're probably selling calls to hedge that or just to collect yield on it. So we really see these implied volatilities falling because people are selling the upside and basically just cash and carrying. But it's just fascinating to see price move up this way without that impulse. There's been a nice move up in open interest this morning. I'm waiting for it to load. So it's probably going to get wicked out at some point.
Yeah.
Just be aware. Like, I don't think we're done with the whipsaw price action just yet. Like, yes, this is bullish, but I think there's going to be.
Yeah, it feels a little premature.
Yep.
But I think today is all about launch day.
Yep.
You want it to be green. You don't want it to be dumping 10% and going to 42K.
Mhm.
With what face will you show if you want to sell it? sell
Well-
$2 billion worth of ETFs? No,
Yep.
of course not.
Okay, so I'm gonna ask you guys in a moment to talk about from now that the ETF is live to the halving, sort of how you can position, how you can think about that, because you guys have already been, I think, pretty open about you're not looking for new trades, but I want to start talking about what you are going to start be looking for. But before we do that, I do have a question from the chat. It has to do with regulation, and it comes from Adrian Flutur, if I got the name right. It says, how much regulation risk do you attribute to DeFi and stables in 24? How would you operate to offset it? Platforms, instruments, etc. Gary's language yesterday hints to that. And I guess if I take that and kind of broaden it, how much risk are you looking at it all as a trader that could be coming down the pipeline and what that could mean for those tokens and those offerings?
That's a good question. I think it's definitely in their crosshairs. Like, they don't like DeFi. We know their open hostility towards crypto in general, and the fact that they even had to prove the ETF, they basically had to do it kicking and screaming. We saw Gary's letter wasn't too welcoming of Bitcoin or crypto in general. So I do think that there's probably something coming down the pike at a later date towards more hostility for DeFi and whatnot. So I do think that is a risk. We'll just have to see. Like, we don't know if the SEC has been neutered in its fight towards crypto after this, or if they said, hey, you can approve the Bitcoin ETF and then eventually the ETH ETF, and you have the green light to go after everybody else. So we don't know. I think there definitely is risk in that. So you definitely have to be careful when you're selecting your altcoins and which DeFi protocols you're playing on and whatnot, because there is that inherent risk to it that the government doesn't like it. And if the government doesn't like it, they're going to trying their best to sanction it and shut it down. So definitely be wary of that.
Yeah, and I would add to that. I mean, there really is at that point a strong distinction between people that are U.S. Domiciled and those who are not. It's very possible that other jurisdictions will be much friendlier to DeFi. However, the liquidity pipes could be choked off with a lot of sanctions. I think most people are aware, without going into specific details, the U.S. Financial regulators have a lot of tools at their disposal across the globe, not just in the United States, to squeeze that. But Bejamin, what is your take there on that question?
The fact that Russia has still not lost the war basically is proof that we've been overestimating the power of those tools.
Well, okay, that was a strong statement. I was expecting to Russia to come into the cards today. It wasn't on my bingo card. Okay, all right. So I think that's a very valid point. As I made the case, I mean they do have strong.
Look, my theory
strong
stands
reach.
very strong. We are at the verge of change of hands of power, whether it's Russia or China. I don't care. I don't know.
Yeah.
But APAC is growing really strong.
Mm-hmm.
APAC is the base now. It's half the population lives here. Half the population is basically consuming, and it's growing. It's highly educated. It's where the healthy workforce is. It's where you have all the tech talent, all the mining minerals. You have agriculture. You have everything. Basically, everything sits in the APAC region, and probably a little bit on Africa as well. Africa still has untapped resources. So this power, this monopoly that was being pushed ahead to say that, look, my tools extend because I have Swift. I don't know. Like, the war should have ended by now if that was the case. Oil went well. Everything went well. What basically went wrong? The only thing is the Western countries went into high inflation.
Yeah.
Take up China, take up India. I mean, China was a different case. They shot themselves in the foot. That was a different scenario. But look at Southeast Asian countries. Look at India. So what went wrong? Those stocks are all on all-time highs. Look at Bangladesh. So third world countries are doing fantastic. Look at Middle East. So all these countries are still doing business with Russia. They still do business with Iran. You can't do anything. So sanctions, to be honest, it wasn't that effective as it is supposed to be. So all this DeFi sanctions that is being discussed about, I don't know, but I think we should stop overestimating the reach of certain entities with a growing power change and a balance that is coming on the other side of the world. There was a huge imbalance before, but it's not so much the case right now.
Yeah. Well, no, I think it's a good perspective to float out there. Obviously, there's changing regimes. I think we can acknowledge that. I think the point you're putting out there is valid. Adrian, thanks you for the response. You said it put it up nicely. Okay. Well, I want to transition now to the last part of the show and talk a little bit more about positioning between now and the halving. Halving, I believe, is still scheduled to be in April. And that is the time, traditionally, what we've seen in previous market cycles, where it kind of kicks off the part of the bull run, where you start to see retail FOMO start to build in, and we start to see some of those gains. So we're in unprecedented territory. Both of you said that. We're seeing a lot of spot volume. We're a little bit surprised by that. What are you guys looking at now between, as I just said, in the next couple of months? What kind of positions are you getting into? And I guess I want to say more from a short-term perspective, you'd be looking for some profit, and more perhaps looking to just really get a maximize your gain for the next 18 months.
Personally, I think for right now, you just still let this play out. Like if you're still in that ETH trade, I think that's great. Obviously, it's moving up tremendously. It's probably going to reach par at some point. If you want to hedge that, go ahead. But for like Bejamin was saying, you don't want to stand in front of these volumes that we're seeing on spot right now. But at the same time, we are quite a bit overextended on a lot of time frames here. We have the rising Dixie, which is something to be aware of over the course of the next couple of weeks. So I think if you're long spot, stay long. Maybe start looking for hedges over the course of the next couple of days. But really wait to see this where this shakes out into the end of the month. So we're only at January 10th right now. There's a lot of time until the monthly close, and we'll see where we're at. If we get any kind of mass deleveraging over the course of the next couple of days, that's probably a good spot buying opportunity. But just really waiting. This is unprecedented times. Like we have no idea where these flows are going to take us, what price is going to look like over the course of the next couple hours alone. Like this is just, there's no historical precedent for this. So don't try to be a superhero and try and figure it out on your own. Just wait for it to come to you one way or the other.
So sitting on your hands for the next couple of weeks, monitoring what's going on, looking at the flows, not really making a plan as of yet.
Yep. Like in terms of options too, like there's not even, if these people are selling options and it's driving it down as prices going up, you don't really want to fade that yet. You want to see until there's some kind of buying taking place here, or at least a change in trend here in the implied volatility levels, which we aren't seeing yet. So it's a bad spot to be leveraged for sure.
Yeah.
Because prices overextended at the same time.
Sure.
We see this falling. So it's very interesting setup. Not at all. I don't think many people expected this, and that's kind of why we got it. The market always moves in the least expected way. So
that's right.
Wait for the picture to become clear. At least that's what I'm doing, because this was not what I had in mind. So I'm not going to try and guess here, waiting for it.
Okay.
To show something where I feel like I have an edge, and that's not right now for sure.
Okay. JJ, the ever, I think someone commented on the last show, your responses to the questions were as good as a politician, which I find so comical, knowing your perspective on that profession. Bejamin, I want to ask you the same question. How are you looking at this? And particularly, now between now and the halving, what are you looking for to give you signals for the types of trades or investments that you're going to make?
We need to see some funding froth. I think we are still missing that. We had that in December, and then we took a large correction and it got completely reset. The thing is, we are seeing good bid books even now. Like there's a lot of taker bid. It's not even about limit orders. There's a lot of taker bid. So that's why I don't want to make predictions in such a situation. Market is still healthy. So I don't think we have over leverage. I don't think we are completely exhausted yet. But it doesn't mean we cannot drop to 40K or 42K for a correction for any reason for that matter. Maybe Dixie moves up suddenly and we see just a correction. But what still puzzles me is that pre-halving, typically every single time we get a significant correction, people deleverage,
Hmm.
or the risk of, they want to make sure that the network is able to hold off. So it's more of a network test as well when the halving happens. It's a test of miners as well. So that part, that is one reason I still think there is still a pre-halving dump that's pending,
Mm-hmm.
and that would be the best of opportunity for people in sidelines to jump back in. But even then, I don't see things changing too fast for new all-time highs until third or fourth quarter of this year.
Mm-hmm.
This is assuming the world doesn't burn itself in the meantime.
Always the optimist here, Benjamin. For those who don't know, he's ready to bug out of any situation in under 5 minutes. We discussed that offline. I won't give you the details, but if you've got questions about how to escape and leave a country in under 5 minutes, I'm pretty sure he has some good ideas. Okay, so just to summarize here, I think for all those out there, this is a show for sophisticated traders. We're trying to help those who may be in an itchy trigger situation that feel like they have to trade, to have a deeper perspective on the way they can look at the market and the way that they can plan and do what they're doing. And for those who are already very sophisticated in their trading, they're going to hear this information, be able to synthesize it, and have a different perspective, hopefully an enriched perspective on the market, where it's going, added to the analysis they're already doing. I guess with that, I think we can wrap up. JJ, Benjamin, any final words to the audience on this historic day?
Keep your eye on the Dixie. It's moving pretty strongly now, so this is something to be aware of.
Yeah, and don't get fooled by the order books.
Yeah.
We are heading into a regime where limit order books might seem something, but the taker is the game. Taker is basically market orders, and that is going to be invisible for you. And you can sense a little bit on CVD, but that is not a golden tool to determine everything that whales or retail or TWAPs or OTC desks, what they do.
Yeah, they know you're looking at these too.
Exactly. All these retail tools, all these $100 tools. I mean, if it was that easy, we'd have a lot more billionaires right by now.
Yeah, the billions wouldn't be worth that much. JJ, was there something else you're going to add?
No, that's all.
Okay.
These people can see the same things we see and more, so they're going to manipulate it at times, and you have to kind of be thinking of that as you're analyzing them at all times too.
I'm laughing. I feel like you guys saved all the alpha for the last 2 minutes and 30 seconds. I'm going to have to do a better job of bringing that out at the beginning of the show. All right, guys. Well, thank you so much for coming here today. For all those who join us in live stream, thank you for showing up. You guys are the reason we do this, so we really appreciate it. If you haven't already, hit the like, hit the subscribe button. And if you've got a friend who you think would enjoy the show, invite them. Have them come on. If they can't do the live show, obviously we have the recording. It'll be going out tomorrow. But the live show, I think all of us can appreciate, is the place to be. With that, we're going to wrap it up. JJ and Benjamin, thank you for coming on this historic day. I'm so excited. This is going to be a crazy year. I think you guys agree, and I'm excited for it all. So with that, we're going to wrap it up. And if you want to join us again, we're going to be back on Tuesday and Thursday every week this year in 2024. And if we get enough of you guys out there, enough sponsors, maybe we'll make it every single day of the week. I don't know. We'll see. All right. This is Marconi Wight telling you to keep some dry powder. And with that, signing off.